Hi everyone, welcome to a new episode of Crypto Tips. This guy's name is Toby, and my name is Heidi. And don't worry, he will speak soon.
I will. I got lots to say.
Yeah, so this is our episode 31 of our AMA sessions. In this one, we're going to cover things like tokenized economies, like the questionable rates that you get on staking using Binance.com, and also we'll be covering different ways to earn cryptocurrency, to earn profits using your cryptocurrencies even during a bear run. So got some good things to cover. So
for sure.
Let's get into it. Oh, before I get into that, these questions were submitted to us by our Patreon members. So thank you everyone who sent us your questions. We are getting through them. There is a bunch. And yeah, so these are our Patreons from patreon.com/cryptotips. That is our paid membership group. A link to that is down below in the video description. In that you can get access to our portfolios, trade alerts, classes, basically trying to get you guys used to what it is to be involved in the cryptocurrency space, what we're doing with our coins.
Like our market analysis, like what we feel is going to be happening. And trying to keep a level head because there's so much misinformation out there right now, especially with like, oh, this coin's, we're going to 100K in next month, or oh, we're going to 10K or whatever. Like, here we go. I'll pitch in. I'll chime in, and that's where, you know, I kind of help people out, kind of map out the direction of where the space is headed.
Yeah. So if you're interested in that, check out the CT Club. A link for that is down below. First question, what is your opinion on tokens related to brands? I have in mind soccer clubs like Barcelona, PSG, also UFC, Formula One. How do you believe, or do you believe in the long-term value of these kind of tokens?
Absolutely. And, you know, like for instance, Crypto.com, we were watching the UFC the other night, and the other day actually, and, you know, we see Crypto.com everywhere. People are going to check that out. They're going to be like, oh, wow, this is kind of cool. What does this do? Oh, wow, an exchange. Okay, this could be pretty cool. I'm going to use that. They have the money or whatever and resources. Just look at what E-Trade had done back in, gosh, the 90s and early 2000s. You know, they were all about you know, the Bitcoin baby the E-Trade baby, and you know, it became kind of famous. And if you see like a company that is well funded, that advertises the correct way, doesn't waste a lot of money. I mean, just look at like FTX. You know, that is one of our favorite exchanges, or my favorite exchanges, and you know, they have billboards all over the place, like sporting stadiums. And so I think it's really great because, you know, you're going to have competition with Binance. And who knows, like, if Binance kind of takes numbers, another backseat, yeah. So that could absolutely happen. I've seen this before, to where, you know, exchanges totally take a backseat. I remember, like, the one exchange,
like Poloniex and Bittrex.
Yeah. Poloniex and Bittrex. I thought, oh my gosh, they're gonna take over, and then Binance slips right there. So if people aren't really on top of their game, just look at FTX and Crypto.com. They're very driven and well funded
and pretty responsive to what people want.
Absolutely. I mean, come on. UFC is attracting the younger crowd. It's attracting millennials. Like, these guys are brilliant.
But also this whole concept of like tokenizing, like companies that are going to move towards tokenizing their company rather than issuing stock certificates.
Wow,
it's really interesting if you think about it. This could be like a whole other video as well. Like, for example, I can go to Amazon.com, order a bunch of stuff, but I don't have to own Amazon stock to be able to do so. There's a separation there. But for example, with cryptocurrencies, if I want to use the Bitcoin network, I have to own Bitcoin. And so there's a requirement of purchasing that coin or acquiring it through mining or whatever. So there's, I think, an incentive model for these companies to move towards tokenization because obviously they're going to make more money if everyone who wants to use that platform has to use their coin. So it's good for the companies. It's awfully capitalistic. But I do remember reading a story about one of these soccer clubs trying to tokenize and bring the capability of the token holders to enact change of how the soccer club functions. And it was actually kind of met with some friction by the people saying, like, why do we have to pay to have an opinion on how this is going to function? So that's also going to be, I think, an issue, is like moving from concepts that were typically free now into pay to play, basically. So it'll be interesting, but I think it's definitely something that we're moving towards. And also
total tokenized economy.
Yeah, but also you as an owner of that token or coin, and that platform takes off, like say, again, Amazon during all these lockdowns, I'm sure it was booming. You benefit from that as well, because your coin is going to appreciate in price, unless it's supposed to be a stable coin or something. So.
And if it's a tokenized economy, it's going to be on exchanges like Binance or FTX or Crypto.com, and what's going to happen to these old school financial giants like E-Trade or TD Ameritrade or whatever, and where you have to have multiple different accounts. You can't just send your coin or send your stock certificate over to another stock broker, without a lot of headache, ridiculous amounts of headache. Trust me, I've done this before when I used to trade stocks, and it's a pain in the rear. Whereas this, I can send it to anybody, anywhere in the world, and yeah. So this is really dangerous for the U.S. dollar as well, because who's going to want to ever use the U.S. dollar anymore? If, like, say for instance, a big company wants to go ahead and issue their tokens, and you get a discount or something for their product or whatever, or service. Mm-hmm. Why would you ever want to use US dollars? You just go ahead and easily buy the token and then trade it in for a product.
I mean,
I can't see.
Even if they launched a digital dollar, CBDC for USD.
Yeah.
It's going to be functioning within a very closed system, right? Probably not going to be listed on. Basically, if they're going by the blueprint of China, it's not going to be able to be listed on these public exchanges to be traded. China's not even letting a synthetic China digital yuan onto centralized exchanges. So it's going to be a very closed network, and the only people who are going to be using the digital dollar are those who have to, because they're forced to through the government mandates that are going to be cornering people into having to use it. So.
Yep, and also you'll be able to see the amount of tokens that a company has. Mm-hmm. If they do it correctly, that's how I would see it being really positively responded towards.
Yeah, I mean, especially if they're already entering this, developed, not fully developed, but developing cryptocurrency space, where there are projects that are completely transparent, mm-hmm. that don't have, some really centralized authority controlling the supply. Some coins do. But if that's the arena they're entering into, they're going to have to be competitive with that. And that means being competitive in terms of transparency and, having a no control over the supply, basically, or like no centralized control over the supply, I should say. Yeah. So yeah, it's pretty cool how like this whole space was, created to replace or as an option out of the really controlled legacy financial system. And now for those who want to participate in it, you have to be at those standards. So it's pretty cool.
Absolutely.
It's elevating everything.
I'm really excited to see what happens in the next 10 years.
Yeah.
Or sooner.
So much is going to happen.
Yeah.
Next question. Can you explain how Binance can manage to offer such aggressive earn rate, more than 7% APY compared to the 5% APY average of Daedalus or Yoroi? He's referring to staking Cardano on Binance. You can get 7%, whereas if you actually were staking it yourself on a wallet that you control, based on the network average for Cardano, the network level, the foundational level of staking for Cardano is like 5%. And how does Binance get that extra 2%? It's like almost 50% more. So no one knows really, because they don't tell you anything.
Well, I mean, they could be delegating, who knows, but then you'd have to take out Yeah,
I mean,
I don't really know.
guaranteed Binance is running their own nodes for their own staking nodes for
They're
Cardano.
using those as delegators.
Yeah, and they're definitely they're basically what I think is a lot happening. A lot of these coins that Binance is staking, like Cosmos, for example, Polkadot, I'm sure, Cardano, there's a lot of them. They're running their own validating nodes. And so what you're doing, if you're staking through Binance, you don't get to choose who you're validating your coins to, because it's automatically being delegated towards Binance. And with a lot of these coins, your coins represent voting power. And so right now, Cosmos, for example, I just did a video on this one. Binance is the largest validator there. That means potentially they have a very influential role on how Cosmos can develop in the future. And that could be the same for anyone. It depends on basically how they weight votes based on number of coins. But it's a concern that if you actually care about the network of the coin, if you actually care about the coin and the longevity of it, and you want to actually see it be built into something, not more than just speculative of the price, you should care about that stuff.
But most people don't care.
Most people don't care. They just want to see that high number.
And the more coins that are being put onto a node for Cardano, the higher pretty much the more likely that you're gonna hit those blocks.
Yeah, exactly. It's like a lottery, basically. So if you buy more lottery tickets, you're going to be more likely to win the lottery. And that's how most proof of stake validators are chosen to mine a block, is based on how many coins they have delegated toward them.
And if you have, people every day pouring in all of their coins because you're giving 7%, that gives you, I think a delegator gets about 10% altogether, I think, or even more maybe. So yeah, that's pretty lucrative, So even giving you a 7%, this is what I'm guessing that they're doing.
Yeah.
They could be doing something else, but I'm pretty sure that they're just delegating and they're just reaping the benefit of even 3% on top, So if it's 7%, they're earning another 3%. So if you're earning 3% off of like a huge, massive amount of ADA on the network, then yeah, you're kind of styling.
Yeah, yeah, that's true. I mean, if they're the validators and they're so heavily deep pocketed and they're getting most of the block rewards compared to other people, and they're running their own operation and they're actually streamlining it, maybe that's how they can inch away and actually offer better returns. But yeah, not necessarily that they're doing super shady things behind closed doors with your coins, like lending them out or anything like that. But I think it more so speaks to, again, the size that they are as a validator. Just to clarify for those of you who are new to cryptocurrencies, we keep saying validator and delegator. Basically, a validator node means that you have a computer that is up and running 24 hours a day, running the software for that particular network, and if you have enough coins within your wallet that's associated with that, you are, like that lottery, selected a certain amount of times to mine a block, and with that you're rewarded with brand new coins, as well as any coins that were paid as transaction fees for the transactions within that block. As a delegator, it's like basically everyone else. You don't have to run your computer 24 hours a day. You can buy some coins, you can store it in a wallet, and you can assign the value of those coins towards a validator. You're not giving the validator the permission to spend your coins. You're not giving them ownership over your coins. You're basically saying, you can use my voting rights or my weight, my stake, my coins in your system, basically. Yeah, you're not giving them ownership. It's just like the value of them, just to clear that up. Last question. My question is, can you give any ideas as to how someone might go about making money in this space now? I've been dollar cost averaging Bitcoin and Ethereum and Solana for a few months, so hopefully someday that will pay off. That's probably going to pay off sooner rather than later for you, but I'm wondering if there is anything else I can do at a newbie level now to try and get some profits coming in. I guess I'm wondering, should I be staking, farming, etc.? Should I just buy some Tether and stake it somewhere? Any thoughts are much appreciated, and thank you both for the great content as always. Well, thanks for the question.
Right now, we have to see where Bitcoin goes. Like, it could be in a more of a consolidation phase. Who knows? It could literally go anywhere. So the rest of the market's going to follow Bitcoin. It's not going to just go off and do its own thing, I don't think. You have one or two coins out there that are maybe doing their own stuff. But as far as price is concerned, Bitcoin does rise all tides. And, and can also dump it too. So you have to be really careful to see, first off, where Bitcoin's going, because there really is no rush right now. But right now, I would, for what we are doing, what we tell our Patreon members to do, or like what we tell them what we are doing, is dollar cost averaging. We don't care what the price is every day, every week, or whatever, or every month. It's wise to maybe take some profits off and go ahead and put it into Bitcoin, but also keeping some USDC or something like that on the side is really wise, especially nowadays when you don't know how far it's going to go down. But you don't have to worry about that as long as you've been dollar cost averaging before that. You already have skin in the game. You're fine. And so like, I would say, like, if you want to do a huge purchase, find out where Bitcoin's going first, and then take the steps. That's what I would personally do. Yeah.
But also, we actually covered this in a very recent class that talked about our investment plan strategy. Basically, if you're new to investing, period, even if you're new to cryptocurrency, you need to have an investment plan, because this is a volatile market and things can get crazy, and that is when sticking to your plan is going to save your butt. It's going to keep you from making really emotional decisions. For example, even I'm guessing within this question, you sound like you might be a little bit impatient, and you're saying at a newbie level. So that to me means you're new to cryptocurrency. You don't probably even fully recognize what farming is, let alone the risks involved with that. So within that class, we talk about how you can identify your level of risk, how much risk you can afford to take on as an investor, compared to, a lot of different categories basically to determine that. We go over it in the class. And towards the end of the class, we actually list the different ways to invest in cryptocurrencies and participate within the cryptocurrency space to see profit. We list those in terms of how from least risky to most risky. So as a newbie, I think things like farming is kind of advanced. Participating in DeFi can be kind of advanced, especially because, again, you probably don't have a whole lot of wiggle room to experiment with. Because basically, if you're farming or if you're using DeFi platforms, in my opinion, you're going to do that with money that you're playing with. Like you have your solid investments, you're not stressed about that, and now you want to play around. In my opinion, it's not something that you do because you haven't seen profits yet in the coins that you've bought so far, and so you need to do something even more risky. You're going to be going out on a ledge that you don't need to if you just have some patience and this long-term perspective outlook. Basically, I just recommend that you watch that class, that formulating your investment plan, because then you can decide for yourself how you fit within those categories, how much risk you should be taking on, and basically. And from there, you can move on to other ways that you can be making profits. But again, at a newbie level, farming is not something for a newcomer to do in cryptocurrency. That's going to take some time for you to understand the risks involved, the wallets involved, where the profits are coming from.
Impermanent loss,
rug pulls, a lot of things going on.
Yeah, just be careful. Just take your time. If you're just starting out in this space, you don't need to rush into everything. There's always going to be something great around the corner, and you're going to just be chasing after everything, and you're going to run out of money, essentially. And so stick with the basics. That's what we are here for. We are here to help guide people. There's not a lot of, there's not a lot of people to help out newcomers in this space. We are some of them. And that's why we're here. We are here to guide people. We don't want people to get screwed. We don't want people to invest in overly hyped projects or DeFi projects or incredibly risky coins, or like getting into crazy startups or whatever. we kind of have an allocation, like in our portfolio, we have an allocation that we're like, okay, this is what we do, because we play it safe, but we also play it. We also know how to accumulate really risky coins, but earlier on.
But we can do so because we have a solid investment in long-term coins. So we're not just now investing in crypto, you know what I mean?
Yeah.
And like we have that, so now we're like playing, basically.
Oh yeah, if I didn't have my comfortable allocation of Bitcoin that I'm really happy with, there's no way in heck I'd be investing in any of these coins.
Yeah.
Like, no way. Bitcoin is number one. Then you can move on to having fun with alts, you know, and then you want to use those profits off of those alts to put it back in Bitcoin. That's what we're doing, and I think that's the safest option. If you look at history throughout this entire space, that's been the absolute best option.
Yeah. So thank you for your questions, guys. These were great. If you enjoy these AMA sessions, we appreciate it if you hit the like button. And if you're new to this channel, hit subscribe with the bell notification turned on so you can get your daily fix of all things crypto. Also, every Sunday I put out a free newsletter. If you'd like to sign up for that, go to learningcrypto.com.
All right, guys, stay disobedient. Don't follow the sheep, follow us instead. Bye-bye.